All right. Good morning, everyone. Let's get going. Sorry for the late start here. All right. Last night's session in the States is another sideways drift for the most part. You can see there a very, very small range once again, kind of moving in, 5 or 6 point range for the entire day on the S&P. We did manage to push higher on the NASDAQ. Maybe led a little bit by Yahoo and a couple of the other tech shares, but more or less a sideways move for the U.S. Markets once again. We had pending home sales numbers that were better than expected on the day, but we had nothing else really to, and the ISM Chicago business numbers that were that actually came down a touch, but we didn't really have anything particularly out there to kind of drive markets a whole lot one way or another. In Asia, we had the Nikkei, which traded much better than you would have thought, probably on the back of these Tenkan survey numbers, which came in much better than expected. We did have Shanghai and Australia that were down a little bit as well as the Kospi. The Hang Seng's actually closed for a holiday today, but then we also had a big data point out of China, which was the PMI numbers that came in at 51, which matched estimates, but they were the fastest pace for the year, so maybe giving a little bit of relief to the China bearish story that so many people have been focusing on over the last little while. All right, we've got a really interesting little chart here. It doesn't really relate to markets. Doesn't really give us an opportunity to buy it at new 52-week lows. But this is how you would have done if you bought it at new 52-week lows versus new 52-week highs. Over a 5-day average, a 10-day average, 1 month, you can see all the way there, going all the way to a 10-year. Going all the way back to 1929. The interesting thing to me was that you made money buying all of them, which is quite impressive, even buying 52-week lows. But you also made money buying 52-week highs, but you did make more money on average buying new 52-week lows. And in fact, I think in every single period on this chart, you made more money buying new 52-week lows, which is really telling. So that's something interesting, something to think about when we're kind of looking at these. But as you can see, buying the new 52-week highs, usually a high percentage of positive returns for you there. All right. No corporate action to report today. We have a lot of market, or had and have a lot of market data out today. We had the Tenkan numbers as we spoke about. We had Chinese PMI numbers. We had Italian manufacturing PMI. We've got PMI pretty much for the entire Eurozone. We've got unemployment rate out of Germany a little bit later. We've got PMI in the UK as well. We've also got local PMI. And then we've got the Eurozone unemployment rate, and we've got PMI in the States as well. So today's the PMI day. ISM manufacturing as well in the States. But there's a hell of a lot of data, and I actually think that this will be a rather important day today to see how, just to kind of gather a scope of what's going on across the board in Europe. All right, let's get into the maps. Okay, the first thing I want to have a look at is the NASDAQ. And the reason why I want to look at this, I know we showed this chart the other day. We're looking at a year chart here. We showed us coming back up to test the highs and highs of 10 years or something like that on the NASDAQ. And I think this is actually going to be a really important chart, as I said the other day, to follow because we had about 5 or 6 tests of this all-time high, and then we finally, last 2 sessions, we really broke up out through this. Remember, the NASDAQ's the one that led us lower last time. I mean, we're making new highs. I mean, this thing, we had a 10% pullback as recently as April. We were 10% off the highs in NASDAQ. Yesterday was the last day of June, and we're already making new highs on this thing. So that just kind of shows you where we are in the market. And this has kind of crept up very quietly. And I think this is going to be really important to pay attention to going forward. I mean, the target here is significantly higher than this on the technical breakout. And I just think that these things, especially the Nasdaq's lulled us to sleep a little bit. It's just kind of been very quietly grinding higher. You can see there's there are really no major green up bars there, but it's just been grinding higher almost on a daily basis. And I think that tech is where it's at, and it's kind of going to continue to be the leader over the next little while. So we'll have to follow this chart very closely, because I think it can end up dragging a lot of the world indexes higher with it. And right now, I think it's one of the most easy money environments in the tech space. I think it's right up there with 99 2000 type story. I mean, these guys are getting crazy money for any business ideas at the moment. Companies that aren't making money, so the bullishness in the tech space is just at probably somewhere near records. So let's pay attention to this. We'll keep this one. We'll keep this one on our radar constantly over the next couple of weeks, because I think it could be a good leader at some point here in the next couple of weeks to give us some ideas of where we're going. All right, we're going to look at SA Breweries. And you can really see here, SA Breweries kind of, that's just a terrible line, but whatever, we'll call that the line. Yeah, basically broke out here again, coming back down to test support. And really we flagged over the past couple weeks. This is a 30-minute chart, so we're looking at 30 days here. And we've broken out of that flag, and really looks like we're probably going to start pushing higher here. And maybe even come back up, retest, or break out to new all-time high. So definitely looks like it's kind of turned the corner, came back down, tested south of 600. It's already starting to turn back to the upside. So watch this one closely over the next couple of days. Could have some more meat on that bone. All right, the next one we'll show is Imperial. Imperial also kind of flagging a little bit here. As you can see, we've been just kind of drifting down and moving out to the right a little bit, going all the way back to the later part of May. And you can see at about $200, and we've closed right at 200. But I think if we get north of 200, this thing's breaking out of its flag, probably has a bit of a higher target here. So there are a lot of stocks that are setting up these same sort of formations at the moment. I'll go through a couple more of them. Discovery, which we did show a couple weeks ago, which was also flagging. Obviously, it's ripped out here, and it's broken out to new recent highs. You can see that we consolidated just a little bit below, right at those recent highs. And then yesterday we really ripped up and popped through. You can see it's really looking like we're going to at least get up here and test the all-time highs and probably the 100 Rand level. So not a whole lot left on potentially on that move, and I think that would more or less be our target for this breakout here. But keep this one in mind. I mean, if we do go north of 100, I think this thing could also continue to run a little bit. All right, MediClinic, also another flag pattern here. Like I said, lots of charts like this. I mean, you can look way more than what I'm just showing this morning. There's a lot of things that look like they're flagging at the moment, kind of typical of markets that give you small pullbacks over a little period of time, and then just start to rip higher. MediClinic really here came back and more or less kind of came down to test support. Didn't quite get all the way down there, but it is a bull market, so we can't expect the pullbacks to be too big. You can see we've really turned up to the upside out of this flag pattern, and probably same sort of thing as the others. We'll be looking to take out this recent high, and I think all-time high, and maybe move to new highs over the next few sessions. And then the last one I show is Aspen. I should have actually shown this one yesterday, but obviously Friday we had this huge data point. Or the conference call, not data point, this conference call, and there are really two levels that kind of stick out in mind, these two levels here. And you can see that we kind of, we bombed down through the 290 level, which is probably where we officially broke out. I would say we broke out probably closer down to closer to 280, but 290 definitely found some support there on a closing basis. We bounced up higher to close just shy of 300, and I actually think that after the conference call from the other day, this might be an opportunity to look to fade this thing. Yesterday to me maybe a little bit of a dead cat bounce. A lot of people downplaying what came out of the conference call, but in either way, I think that opinion of the stock has possibly been changed a little bit after that conference call, and I see it very difficult for it to push back up and really move through the recent highs. And that's it for today, guys. Thanks a lot. What? No.